This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August 23rd, 2013. Our time is 8:45. We're on your favorite radio stations. Also, the show is archived on HESradio.com and RareColoredDiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. You can find us there. Show is portable, iPad, iPod, iPhone. We go anywhere you do. Harold does daily market commentary. You can find it on his website. You can find it on the podcast site as well. Harold recommends worldwide precious metals. When it comes to investing in gold, silver, platinum, palladium, don't forget they are going to be in Toronto in October. If you would like to book a private information session with them, call 1-866-623-2002 or sign up online on their website, wwpmc.com. This week, the Gallup organization, they keep track of unemployment as well in the United States. For the week of July 21, it went from 7.5% unemployment to 8.9% unemployment, and that tracks very closely with government statistics. Should be interesting to see what happens in the weeks to come with the unemployment report. John Hussman of Hussman Fund says we could see the stock market go down 40 to 50%. The Fed minutes came out. Everyone was looking to see what they were saying, and they believe that they're in, at this point in time, from what they were reading in the tea leaves, the QE, everyone is on board with Ben Bernanke. And it's just a matter of when the tapering will take place. We will have to see, depending on the economic numbers. Also, bond funds. They lost $30.3 billion in August, according to Trim Tabs, and in June, $69 billion. The Fed owns $2 trillion of U.S. debt for the first time because they're obviously they're printing money, buying their own bonds. The NSA has the capacity to spy on the United States, the internet traffic, 75% of the internet traffic. In Japan, serious concerns about the Fukushima plant, toxic water leaks. That is becoming a real mainstream story now. People very concerned about what it could possibly mean. And also a rare Ferrari sold for $27.5 million, the highest price ever paid. And Harold, it was an outstanding week for hard assets. Obviously, something like a diamond is similar to a Ferrari or a painting. And it was a good week for the precious metals as well.
Oh, it certainly was. In actual fact, a great week for precious metals. Gold, as we're trading on Friday, which is unusual. Normally Friday, in the summertime, because a lot of the traders are gone for the weekend, it's slow. But gold is rallying very strong. We had a very strong week this week. And as we're taping the show on Friday morning, gold is up 1870. So we actually hit a high this morning of 1398.80. You would think that 1400 gold may be some resistance. It's very minor resistance. In fact, the heavy resistance for gold was at 1375, which we broke through this morning. So if the market holds up and gold closes above 1375 today, and on Monday, the next major level for gold will be 1450. So we're up 1870 right now. Funny thing is that gold opened down $4 or $5, so we're actually having an amazing day in gold. Silver's doing equally as well. Silver's up 57 cents this morning. We're trading at 23.86. We did hit a high of 23.93. $24 silver is not really a resistance level. Basically 28.50 is. And that would be a fabulous number. To get two closes above 28.50 would really solidify this market. Platinum's up $8 at $15.53 even. Palladium's even on the day, but we're back up to $7.60 in the palladium market. The stock market's been all over the place this week. The Dow has now dropped below the 15,000 level. It's trading right now at 14,972. It's up 9 points on the day. The NASDAQ is up 13 points at 3,652. The TSX actually had a very good week. It's up 80 points this morning and is trading at 12,754. U.S. dollar did rally this week. Every time it comes close to that 80-cent level, which is major support for the U.S. dollar, and we were at 81.50 earlier in the week. Now we're at 81.49. So The fact is that even though the U.S. dollar was very strong this week, the gold market did extremely well. And normally, there's a direct correlation between gold and the U.S. dollar. When the U.S. dollar weakens, gold strengthens. Back in 2011, when we had 72.50 in the U.S. dollar, which is the low that we've seen, gold was at $1,920. So all in all, gold, silver has done extremely well. The Dow has dropped below 15,000. The TSX has had a good week. The U.S. dollar's, again, back up to 81.49, but there's no doubt in my mind that the U.S. dollar is going lower. And then we've got crude oil, which was volatile this week on profit-taking, is still trading above the 105 level. We're up 16 cents this morning. So all in all, the metals are looking good. August is a very, very slow month, probably the biggest month for vacation time, especially in Europe. Again, it just absolutely baffles me how Europe can be in such horrible financial shape and still take a month's vacation. It makes absolutely no sense to me. The fact is that the markets are looking a little bit stronger. However, we've always been bullish on gold and silver for the last 13 years. Obviously, in 2011, when we hit 1,900 in gold and silver went to 50, we were ecstatic, as were most people that were trading in the gold and silver market. And then we know that the government stepped in, the exchanges stepped in, and they brought down the gold and silver market by raising the cost of doing business, margin requirements, and that caused the hedge funds to sell, then the ETFs to sell, and then everybody went negative on gold and silver, especially Wall Street and the mainstream media. But look at what's happening at this point. There's no doubt that the U.S. dollar is going to continue to fall over the shorter term, which is going to push gold prices substantially higher. If we break the 80-cent level in the dollar, which I believe we will, then you're really going to start to see gold fly. And again, don't forget that in 2011, when the U.S. dollar was at 72.50, gold hit 1,900. If we break 72.50 eventually in the dollar, which I truly believe we will, and that's primarily because of all the dollars that are being printed and zero interest rates type of thing, if we get back down to 72.50, 72.5 cents in the U.S. dollar, that should push gold back up to about 1,900 to 2,000. We break below the 72.5 cent level, 72.5 cents, that's what's going to push gold up to 3,500 to 5,000. So we anticipate that before this whole thing is over, the U.S. dollar could be as low as 50 to 60 cents, and that would cause the price of gold again to top out somewhere around the $4,000 to $5,000 range. So even though the last couple of years have been choppy and the gold market has come down, very few people have lost faith in gold. People that own physical gold and silver are still firm believers. And again, the proof was that when over the last year, when everybody was trying to buy physical gold and silver, there was very little available. And when there was silver available for physical purchase, the cost was about $4 above or more above the spot price. So basically, those that are holding gold and selling it are asking for gigantic premiums. In fact, earlier this week or last week, when silver was trading in and around the $21, $22 level, they were actually asking $26 an ounce for an ounce of silver. So that'll show you that there was a $4 to $5 premium on the price of physical silver. What this all boils down to is that simple economics 101. When the demand for a product is high and the supplies are low, the price always goes up. So why in the world would it be different for gold and silver than any other commodity in the world? It isn't. It's only when the governments are getting desperate, as they are at this particular point, and there's tremendous desperation in the markets, not only in the United States, but essentially throughout Europe and China and other major areas. The world is not in a very good financial state at this particular time, and it's probably going to take a long time for them to get back on track. We all know that creating more and more debt is not the answer to getting this country out of trouble. What they've done in the United States is they printed so much money, and they put $85 billion a month into the markets every single month, which has supported the stock market and essentially the bond market. But look what happened this month. The stock market has now dropped below 15,000, and the bond market lost $3 billion. So the fact is that this is not working. The government felt here in the United States that If we continue pumping money into the system, eventually what it's going to do is get the economy back on track. And they've been doing this since 2008. It's now 2013. So basically, we're looking at basically 5 years of putting trillions and trillions of dollars back into the market with no positive effects whatsoever. In actual fact, last month when they discussed ending or tapering down on the quantitative easing each month, the market went substantially lower. The stock market reacted negatively and dropped 550 points in 2 days. So now the government's in a catch-22 again. They put all this money into the market, trying to spur the economy, get corporations to hire more people, get more people to work, and it's going to cause the economy to get stronger, because when people are working, they're feeling better about the economy, they're buying things, the retail market is up, they're traveling, they're going for dinner, they're spending money. That is not happening at this point. In the United States, 75% of the people are living paycheck to paycheck. About 100 million people are living off the food stamps. So how in the world can the economy getting better when 75% of the people in the United States are living paycheck to paycheck? That is the most frightening number that I think that you could ever possibly look at. So the government is frustrated, obviously. They put all this money back into the system. It's not working, and that was obviously obvious by the employment numbers that came out from Gallup that Randy mentioned at the beginning of the show. How in the world does it go from 7.7% unemployment to 8.9% unemployment in 30 days? Because the system is not working. And then add to the fact that because of Obamacare, which is actually going to destroy the marketplace, and what it's actually doing is causing corporations to fire long-term and full-time employees to a certain extent, and then bring them back as part-time employees to avoid paying the insurance for them. So again, you're talking about a situation that is getting worse and worse. The economy is not getting better, it's getting worse. Then they come out the last couple of weeks and say that the price of real estate is skyrocketing in the United States, and it went up almost 20% in certain parts of the United States in 1 month. How in the world is that possible? You don't want to gamble with your primary asset, and your primary asset is your home. It's not something that you gamble with. People learned that in 2008 when they lost their homes by speculating, and now what the government is doing is the exact same thing. They're bringing up the price of real estate to such a ridiculous level at a time when people don't have any money and they lost their credit ratings because they lost their homes back in 2008. So again, I'm a very pragmatic person, very conservative, don't take unnecessary risks. At this particular point, I don't have a penny in the stock market. It's very possible in October the stock markets here in the United States could plummet by 30, 40%, 20%, whatever is coming. It is not going to be pretty. Get your money out of the paper asset markets before it's too late, because the bottom line is that when the stock market goes south, which it's going to do. We're already starting to see it. No matter how hard they're trying to support it, when that market does drop, it's going to rip the hearts out of investors, because they're just almost getting back to break even from 5 years ago when the market started to fall. What I'm seeing in the market is what we've been saying for a long, long time. You cannot create a strong economy out of creating more debt, and that's exactly what's happening in the United States, in Japan, in Europe, where they've got as high as 65% unemployment. Again, we talked about that last week. That's a lost generation. When you've got 65% of the college kids not being able to work, not being able to get a job, not going to get married, not going to contribute to the economy in any way, that's a disaster. These poor people that are coming out of college with high hopes and ready to take on the world, there's nothing for them, because the governments have screwed up so badly that they've ruined the economies of these countries. And the United States is probably going to be the biggest of all. So again, we're heading into a time that's extreme. We could see a major rally coming in hard assets. There was a Ferrari that Randy just talked about that sold for $27.5 million this week at auction. $27.5 million, and there's a blue diamond coming up for auction for $19.5 million next week. So again, that's where the money's going, into the hard asset market: physical gold, physical silver, diamonds, vintage cars, art. Those type of assets will do tremendously well as the paper markets fall apart, Randy. That's what I'm seeing at this particular point.
It is a very interesting time, very, very important time to keep track of your money. You work hard for your money, profit and protect. Here's a great quote from Ron Rosen. You can find it in our newsletter. Money does not come out of thin air. Money is not paper. Money is the result of hard work. You know that. I know that. And as Churchill said, blood, sweat, and tears. The only money in the world there ever was, is now, and ever will be, is gold. This will be the case until the human race learns to be honest. That is a quote from Ron Rosen. To invest in precious metals, go to wwpmc.com, call 1-866-623-2002. Worldwide Precious Metals of Vancouver is a leading Canadian precious metals bullion dealer recommended by Herald for over 10 years. They're the experts in this very specialized field. You've known over the period of time that we've been doing this show that Herald trusts them and recommends them. They have, coming up in October in Toronto, a private information session. If you would like to book one of those private information sessions with them, call 1-866-623-2802, 1-866-623-2002, or sign up online, wwpmc.com. Start your own precious metals investment account today. All gold is allocated, either wholesale or premium. Worldwide Precious Metals there to help you maximize profit, minimize risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage, in premium storage, or even actually they have another form of it as well, and that is wholesale. Stored metal is outside the banking system. The metal can be delivered to your door. Worldwide Precious Metals has the access to the physical precious metals you want today. Connect with them, 1-866-623-2002, their website, wwpmc.com. Richard Russell, who has been writing the Dow Theory letters for well over 50 years, said this week, I don't believe the economy will be bright enough for the Fed to cut back on QE later this year. A continuation of QE should be bullish for gold. Speaking of gold, I was amazed that there was absolutely no mention of gold's brilliant performance last week in Barron's or any other newspaper. Evidently, nobody wants to mention gold's upside breakout. Just a complete silence on gold. It's absolutely amazing. When gold was falling, it was the talk of the town. Also, Egon von Greyers, an expert on precious metals out of Switzerland, saying gold is now on its way to new highs and it will happen very quickly. For the metal, they're saying it should move very quickly to $1,500, $30 for silver. The gold-silver ratio has already fallen from around 67 to 59. That ratio is on its way to 50 in the short term. I would just add that gold is strong right now versus all fiat currencies, including the U.S. dollar. So this strength in gold is across the board. I hope investors are fully invested and enjoy the ride in gold because this will be a very strong and long-lasting rally. If you would like to read the material that we're talking about on today's show, get our free weekly newsletter from Worldwide Precious Metals. We send it out via email free of charge every week. 1-866-623-2002 or wwpmc.com. William Kay had some very interesting points to be made about derivatives, and Harold has talked about derivatives for a long time. There is serious concern at the moment over derivative exposure because of the move higher in interest rates. So there are probably entities who are screaming right now because of what has taken place in the interest rate market. And if they had to actually report, as opposed to just papering over in some fashion, the mark-to-market losses they are experiencing, this would not only be extremely painful, but possibly it would destabilize the entire financial system. In other words, one thing central planners can't allow is the too big to fail to appear to be failing again, because that's a very slippery slope. Confidence in the banking system is everything. Everyone knows, particularly after 2008, that the financial system has far too much leverage. As a result, as soon as the people lose confidence in the system, panic will ensue, and so that just can't be allowed to happen. The system would implode again, and this time it would be much more serious than 2008 because the sovereigns no longer have the firepower to bail out everyone. That is what's different now, and I don't know precisely what is happening behind the scenes right now, but I would imagine it's quite chaotic. And this is where, Harold, a very good interview with King World News, Eric King, King World News, interviewed John Embry. And we really want everyone to get and read this interview. John says we are now on the verge of a historic meltdown and collapse. Get this interview in our newsletter. Connect with Worldwide Precious Metals, 1-866-623-2002, the website wwpmc.com. And in this article, he goes on to talk about the President of the United States having a meeting with all the banking heads, and it's his belief that rising rates are killing an over-levered economy. And as a result, they're meeting because a lot of these banking heads are very concerned about a derivatives meltdown. And a lot of people might say that is not true, but take a look at this article and read it for yourself. As William Kay was saying, John Embry dovetailing on it and agreeing and thinking that maybe that was one of the reasons why they had a meeting with the President of the United States, some of the banking heads, because there's a serious concern about interest rates going up and a complete meltdown in the derivatives market. And Harold, we have about 2 minutes left in this segment.
Well, there is no doubt, Randy, and we've talked about it for years, that the derivatives market is possibly going to be the destruction of the financial markets. They're so heavily leveraged, they're non-regulated, and they're in the quadrillions of dollars. And we saw a brief indication as to how bad that market can be back in 2008 when Lehman went under, and the market absolutely plummeted. So the fact is that when somebody does profit from a derivative, like Warren Buffett did last year or earlier this year, somebody loses the equal amount. So the fact is that as they try to unravel these derivatives, again, in the quadrillions of dollars, it's going to be a mess. And that is my biggest fear. And there's a lot of fear in the marketplace, but the derivatives market is a market that could actually crush this market again. And again, it's right there, and there's people that are in the know that are saying that when the financial markets do fall, it's primarily going to be because of derivatives.
Connect with Worldwide Precious Metals. Their website, wwpmc.com. The telephone number, 1-866-623-2002. Remember, Worldwide Precious Metals in Toronto in October. If you'd like to sign up for a private information session with them, 1-866-623-2002. The website, wwpmc.com. Stay away from bank certificates and precious metals ETFs. There are just way too many questions about them, paper promises. Everyone is moving into physical precious metals. And if you want the physical metal, Worldwide Precious Metals will be more than happy to help you get that in your portfolio today. Going to come back and talk about another hard asset that has just been outstanding since Harold brought it to our attention in August of 2005, and that is naturally fancy colored diamonds, rare colored diamonds. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 23rd, 2013. Our time is 9:09 in the morning. Our radio show runs on your favorite radio stations, also online, archived at rarecoloreddiamonds.com and HESradio.com. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. Our show is portable. You can take us anywhere. Harold does daily market commentary on his sites and on the podcast site as well. Worldwide Precious Metals, company Harold recommends you use when it comes to starting your own precious metals investment account, gold, silver, platinum, palladium. They are the specialists in this very specialized market, the experts to trust and work with. And they're going to be in Toronto in October. To book a private information session, call 1-866-623-2002 or go to wwpmc.com. Harold's website for diamonds is rarecoloreddiamonds.com, and it's very famous, obviously, even before Harold being on Bloomberg. Harold was on Bloomberg, I guess, approximately a month ago, and we have that interview. If you would like to see it, he was interviewed by Deirdre Bolton, and he was talking about why colored diamonds are a great investment. He was on Money Moves, and will be back on Money Moves again. You can check out that interview. We will be happy to send it to you. We should mention Harold's website for auctions is hsfineauctions.com. The next auction is October 21st, 8 Eastern, 6 Mountain. Go to hsfineauctions.com, take a look around, and you'll get an idea of exactly what Harold is doing on the auction front. RareColoredDiamonds.com, featured diamond of the week, and this is a stunning Argyle pink diamond, because it's a .20 carat princess cut, fancy intense purplish pink Argyle. And Harold was saying to me prior to the show starting, it's very rare that they get these princess cuts in. It is absolutely stunning. One of the top stories this week, Sotheby's to auction off rare blue diamond. And they are going to do that. The Premier Blue will be sold on October the 7th as part of Sotheby's regular twice-yearly auction series. The stone weighs 7.59 carats and is about the size of a shirt button. Its size, vivid blue color, and round cut, highly unusual for colored diamonds, makes it exceptionally rare, and Sotheby's expects the stone to bring about $19 million. If you would like to read more about that, you'll find it in the newsletter. You can get it from Harold at rarecoloreddiamonds.com or connect with him at 1-800-432-1022. And Harold, it is a very exciting time for diamonds. We're seeing record prices at auction, and obviously we have an outstanding featured diamond this week as well.
You bet, Randy. You know, the thing about the blue diamond that's coming up for sale, first of all, a round blue diamond is extremely rare. The vivid color is the best color you can get, so it automatically, is the higher priced diamond. But, in 2005, you could have bought a 1 carat vivid blue flawless diamond in the range of about $200,000 a carat. That was back in 2005. Now, then basically by 2008, it was up to very close to about $2 million a carat. It went from $200,000 to $2 million a carat because the mine that produces blue diamonds had closed down. Very similar to what's happening with Argyle. Now, just look at what's happening. This diamond is now going to sell for close to $3 million a carat. So you could have bought this diamond 8 years ago, or a similar type of diamond 8 years ago for $200,000 a carat. Now you're going to pay close to $3 million a carat. And the thing that's very interesting about what's happening right now, a Ferrari sells for $27.5 million. And it's still being driven, by the way. So people are willing to spend $27.5 million to own a Ferrari, an old Ferrari. Somebody's willing to spend close to $20 million for a very rare blue diamond. So the fact is that why in the world would people be putting that type of money into an asset like a diamond or into a vintage car when they could be putting money into the stock market or the bond market? Very simple reason for it. The stock market and the bond markets are volatile and you could lose all your money, and putting your money into an asset like a diamond, like this vivid blue, that would never ever drop in price. In fact, all it's done is go up in value. So if you think about making an investment back in 2005 and now 8 years later that has gone up more than 1,000%, you tell me any other investment that can give you that type of return with the safety that you have in the rare diamond market. And that is now happening again. The fact is that blue diamonds in 2005, when the mine closed that produced them, you could have bought them for $200,000. Now one's going to sell for close to $3 million a carat. That's an unbelievable return on your invested dollar. You've now got one more opportunity to do this. And I don't believe that there will ever be another opportunity to be able to invest in a diamond where a mine that produces most of that diamond is now going to close down. So we had it with blue diamonds, and right in front of your very eyes, you've seen the price of blues go from $200,000 to almost $3 million a carat. Now you're going to see it in pink diamonds because the Argyle mine in Western Australia that produces these diamonds is going to close. The same thing that just happened in 2005 with blues. And if you don't learn from history, history always repeats itself. So now we have an opportunity to invest in pink diamonds from the Argyle mine. The fact is that the mine is going to close by 2018, 2019, which is only a very short period of time from now. It's only 5, 6, 7 years to be able to hold on to an asset that could go up 800 to 1,000%. We saw it happen in blues, and now we're starting to see it happen in pinks. We carry the most beautiful Argyle pink diamonds in the world. We've invested very heavily in them for our clients, and we carry the majority of Argyle pink diamonds. The very best that you can possibly buy in the blue diamond market were vivid blues, and you saw what happened with vivid blues. Went from 200,000 to almost 3 million a carat in the last 8 years. Now the same thing is happening in pink diamonds. If you look on our website, rarecolordiamonds.com, go to the loose diamond section and look at our pink diamonds. We carry the fancy pinks, the fancy intense pinks, and the fancy vivid pinks, along with the fancy deeps that are in the same range of the vivids. These diamonds never go down in value because there's hardly any of them available for sale. The fact is as we get closer to the mine closing down, you're going to see that these diamonds are going to escalate in price tremendously. So the fact is that you can still invest in pink diamonds at a very reasonable price. You can buy a pink Argyle diamond starting at about $25,000 and going all the way up from there. These diamonds go up by about 15 to 20% a year. The vivid pinks, which are the best color, the highest color grade, can go up way more than that. They can go up as much as 50% a year. And as we get closer to the mine closing down, these pink Argyle diamonds are going to start to double in a year or two. So they're one of the best investments you could possibly make. We just saw what happened with blue diamonds for the exact same reason. They went from 200,000 a carat to almost 3 million a carat. Take advantage of this. While there are still Argyle pink diamonds available, again, we sell these diamonds directly to our clients. Our clients own them outright. We ship the diamonds directly to you so you own them and they're in your personal property. We also keep in very close touch with our clients. We send you our newsletters each week, our diamond newsletters each month. We send you information on diamonds constantly, and the most exciting thing is that we own the secondary market that resells them. That's always been the problem with the diamond market. How do you resell it? Well, we've thought of that for you. We own H. Siegel Fine Auctions, the only company of its kind. It's an international firm that sells our clients' diamonds all over the world, and we get 10% of the profit and our clients get the rest. No other company that deals in the diamond market has a secondary market to resell their clients' diamonds, so please take that into consideration when you invest in this market. Make certain that the company that you're dealing with has the wherewithal to resell your diamonds for you. We spent a fortune getting into the diamond market, and we actually built this amazing website called H. Siegel Fine Auction, and it's the only company of its kind, and we're having an auction on October 21st. Make certain you sign up for that. Our last auction, we had 20 diamonds up for sale, 17 Argyle pinks, 2 Cartier diamond rings that were signed, and an orange diamond ring, one of the rarest diamonds in the world, and every one of those diamonds sold to international investors within 1 hour. So this is what we bring to the table. We bring the lion's share of investment diamonds to you. As far as Argyle pinks, nobody has anywhere close to the inventory that I have, and I just spent over $40 million with Argyle to make certain that my clients have the opportunity to invest in this market. Argyle pink diamonds over the next 10 years can increase anywhere from 500 to 1,000%. If that's something that interests you, and it should, because by keeping your money in the bank and getting 1 or 2%, that's certainly not going to do it for you. With interest rates so low and not getting any return on your money, it forces people back into the stock market, which is the last place you want to put your money at this point. Some of the most brilliant analysts at this point are saying that the stock markets in October could plummet, and you don't want to be in that situation again. So get some money into an asset like a rare color diamond. Argyle pinks are amazing investments at this point. We saw what happened with blues. The same thing is now happening with pinks, and you can get involved in pink diamonds starting at $25,000. In 10 years, that same diamond could be worth as much as $250,000. You let me know any other investment that will give you that type of return with the safety that you have in the rare color diamond market, because there's so few of these diamonds that they never ever decline in value. We highly recommend Argyle pinks. Then you want to look at our yellow flawless diamonds. Again, these diamonds will increase by at least 15% a year, but they've got to be flawless. And the fact is they start at $15,000 and they go up from there. They go up by 15% a year. They never, ever fall in price. And during times of high inflation, they've gone up as much as 500% in 1979 and 80. 500% it did as well as gold and silver without the volatility that you have in the commodity markets. And we have yellow flawless diamonds starting at about $15,000. We have 2-carat yellow flawless diamonds that are in the $30,000 to $40,000 range. And keep into consideration that only one diamond in 15 million is over 2 carats, and I can assure you they're not flawless. We have diamonds that are in the 5-carat range, 10-carat range, 15 and 20 and 30-carat diamond ranges. In actual fact, I carry diamonds starting at $15,000, and I have a diamond that's worth over 50 to 60 million. Most of our clients that invest in diamonds are hardworking, everyday people that, again, are sick and tired of getting, 1 or 2% return on your money or being forced into the stock market where you can't sleep at night because you're petrified that you're going to wake up in the morning and find out that the market has plummeted. Get some money into the rare diamond market. There's one other market that I want to talk to you about. It's the D-flawless white market. It's one of the most amazing diamonds you could ever own. They're 10 times the price of a normal white diamond. They're perfect in every way. They go up by at least 15 to 20% a year, and they're negative correlated to the stock market. In 2008, when the Dow dropped 50%, these diamonds went up 50%. There's never been a more important time to own assets like rare colored diamonds, like physical gold, like antique vintage cars, and those type of assets. Again, a Ferrari that's still being driven to this day is sold for $27.5 million at auction. And the fact is that there's a diamond in October, a blue diamond, that's going to sell for close to $3 million a carat. So again, it's one of the best assets you could ever own. Look at our website, rarecoloreddiamonds.com. Look at our pink diamonds from the Argyle mine. And again, those diamonds will give you the return that you need, again, that is not available in any other marketplace, and it's a very, very safe and private investment that nobody in the world knows that you own. It's called portable private wealth. The Europeans call diamonds real estate in your pocket.
And as we've had on our show in the past, stories from major high net worth individuals around the world right now looking to get into hard assets like diamonds. This is becoming more and more mainstream due to the financial times that we live in. As we were talking about earlier in the show, derivatives, weapons of mass destruction. At the end of the day, if something was to explode in the derivative market, if you were holding a diamond or you're holding gold and silver, you would be all right. RareColoredDiamonds.com is Harold's website. The telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. If you'd like to receive our free weekly newsletter via email from Harold, he'll be happy to send it out to you. You can see our featured diamond this week. It is an absolutely stunning diamond, a .20 carat princess cut, fancy, intense, purplish pink Argyle. The cut on it is absolutely amazing. We'll send out that interview with Deirdre Bolton of Bloomberg, where they interviewed Harold about a month ago, and it was a Friday on Money Moves. Harold will be back on the show prior to the auction coming up on October 21st, hsfineauctions.com. He'll be on again. If you'd like to see that initial interview, you can see it. We can send it out to you. And read that story on the Blue Diamond from Sotheby's. Sotheby's selling the 7.59 carat diamond. They're thinking it could go for $19 million. And Harold, we are starting to get into that season. Once we get into the beginning of September, we will start to see auctions in September and October and November. And then we'll get a very good idea exactly where the hard asset market is for the fall. But I suspect we will continue to see record prices and increases in prices for colored diamonds.
You bet, Randy. And, we started the rare colored diamond, business many, many years ago. There's been many people that have come into the business, which is good because there's a lot more awareness. But the fact is that what is coming up from time to time, like this diamond coming up in October, is such rare diamonds, and these are diamonds that in most cases have been off the market for decades, in private collections type of thing. To give an indication, I was out for dinner with my wife and her girlfriend and husband, and she was wearing a 5-carat purplish pink diamond ring that her grandmother gave her. Her grandmother bought it 50 years ago for about $35,000. Today that diamond is worth in the range of $3.5 to $4 million. 10 years ago, I bought a 2-carat vivid pink argyle diamond for $350,000. That same diamond today is worth upwards of $4 million. So again, these are longer-term investments. You put them away for the longer term. Most of my clients that invest in diamonds put them away for retirement because you cannot trust, any returns coming from the coming from your RSPs. The stock markets are way too volatile, and the fact is that if you look at the returns over the last decade, most people have not made a penny. But put a $20,000 diamond away for 10 years and see what the returns are going to be. You're going to make 300-400% return on your money. So again, all in all, there's tremendous profits available in the rare color diamond market, but on top of that, it's capital preservation. Try to hold on to your money today. Again, putting your money in the bank is extremely risky if the bank closes and you're not getting any return. Look at the rare color diamond market. There's a reason that we brought it to you. It's one of the best investments you can make.
We saw what happened in Cyprus, Harold. 47.5% of the money taken away for those that had bank accounts over 100,000 euros. And that's the concern. People are looking at what's happening and saying, I need to position myself so this does not happen to me. I need to have hard assets in my portfolio. I need to have alternative assets that are portable so I don't have to worry about governments absconding with my money. And that's exactly what they did. Sure, you may have gotten bank shares, but the bank, what is it worth? It's a worthless bank. So you're given shares in a worthless bank. If I have, let's say, $1,000 in the bank and I need to pay bills or buy groceries, or even if you ran your own company and you had a float and need to make payroll, and they take 47.5% of it, it's going to have a devastating impact on your life. And I'm sorry for those people telling us that, oh, well, you got bank shares, you should feel good. I'm sorry, that doesn't make me feel good. I'm sitting with half the money that I had before, and there's even restrictions on me taking it out beyond that. So I'm just sorry. I'm Harold. I am a little frustrated because I don't understand the logic where people think this is okay. It's not okay that governments come along and these bail-ins, these provisions are starting to be implemented all around the world with different countries. And they say, oh, it will never happen. Well, I'm sure people in Cyprus probably thought it will never happen. And if these big banks start to go down with derivative problems, as we talked about earlier in the show, do the sovereigns have the money to bail out us again? More than likely not. And if they do and start printing money, Lord knows we could end up with hyperinflation. But now is the time, Harold. Connect with you. Speak with rarecolorediamonds.com. Harold Siegel, 1-800-432-1022. Educate yourself about this market. But it's very frustrating to me to see what happens in a country like Cyprus. And people need to be aware, profit and protect the money they have, because, darn it, we work very, very hard. As I quote off the top of the show from Ron Rosen that I read, money does not come out of thin air. People work damn hard for their money, and when it's stolen and taken from them, I take great exception.
You're 100% right, Randy, and you summed that up perfectly. The scary thing is that in Cyprus, I truly believe that was just a test to see how people were going to react worldwide when the same thing happens here in Europe and in the States. So the fact is that you didn't see rioting. You didn't see people throwing rocks through the bank windows or anything like that. For some reason, they accepted it. And by accepting it, what it does is it sets a norm for the banking industry, because what happened in Cyprus, the exact same thing will happen here in the United States, and the same thing will happen in Europe. I truly believe it was a test to see how people were going to react to half their money being stolen. And now that things went fairly smoothly in Cyprus, I think it's going to happen elsewhere, and it's a frightening situation to think that we could wake up one day and find that we have to run to the bank and hope that we're going to get some of our money back. And the fact is, what happened in Cyprus, they literally closed the bank for 2 weeks. Nobody could get anything done. And if you think that couldn't happen here, just look at 2008 when almost the exact same thing happened. The banks were closed. You couldn't get into the banks. And basically people were panicking. And if the FDIC didn't raise the insurance on personal bank accounts in the States from 100,000 to 250, we would not be talking today, because there would be no money left in the financial system. Everybody would have taken their money out. There would have been a $4.5 trillion run on the banks. And just look at what the bank stocks are now. If you think the U.S. economy is doing better, just look at what Citibank and the Bank of America are trading at. Citibank was an $86 stock, and now it's somewhere around $13. There's no way that the bank has recovered. There's no way that the banking system has recovered, and the exact same thing that happened in Cyprus could definitely happen in North America if we don't pay attention to what's going on. We don't want to see us wake up in the morning and find out that because in Canada, you've got $125,000 worth of insurance on your bank account. If you've got $500,000 sitting in the bank, you're going to lose everything but $125,000. The same thing in the States, except they've got $250,000, and the same thing will happen in Europe. Let's be smart about this. These are the most dangerous times we have ever been involved in, and we want to make certain that we remain conservative, we don't take unnecessary risks, and you own the type of assets that are going to basically maintain its value, that are not going to drop in value so you lose your money. A diamond will do that. We're very bullish on gold and silver. We're very bullish on oil, and we think that those are the areas where most of the money is going to be made. Do yourself a strong favor. Get some of your money out of the risky stock markets and paper asset market and get something into diamonds and gold. You're going to make an awful lot of money, much more so than people that are sitting in the stock market.
I remember specifically when we were doing the show, when we had the bank runs in Europe, in Northern Rock, that British bank, people lined up for their money. And I specifically remember as well in California, we know Rogie Vachon, the great Los Angeles Kings goaltender and then executive with the team for a while, very well-known hockey player. There was a story, he was at a bank in California, lined up to get his money out. And we've seen it in Cyprus, and I think people need to have some money out of the banking system. Take a look at the possibility of gold, silver, platinum, palladium, diamonds. RareColoredDiamonds.com is the website. Speak personally and privately with Harold, 1-800-432-1022. To invest in precious metals, the company Harold recommends you use, Worldwide Precious Metals. Connect with them, wwpmc.com. Their telephone number, 1-866-623-2002. But now is a time to be very, very cautious, Harold, as we get into the fall, September and October, and we have about a minute left here in the show. September and October is always a very volatile time in the financial markets, and I think we could see some potential fireworks.
You're right. The biggest drops have been in October for stocks, and some people are predicting it again. You know, if it's possible to happen, you don't want to just sit there like a deer with their, in the headlights type of thing. You want to be proactive. If there's a chance of this market plummeting and you losing your money, go on the sidelines for now. Take the risk out of the marketplace, because October, people are just getting back to work from the summer vacations, especially in Europe. The markets are picking up, and the sentiment is not bullish for stocks at this point. So, again, be smart about this. Don't take unnecessary risks. We work so hard for our money to throw it away just for not doing the right thing. You're much better off getting out of the market and sitting on the sidelines than taking the chance of losing all of your money.
Speak with Harold about our featured diamond of the week, and it is a stunner from the Argyle mine. And the cut on it is absolutely gorgeous. It is a .20 carat princess cut, fancy intense purplish pink Argyle. And I can tell you, this is one you want to see. Go to RareColoredDiamonds.com, see the video. You can see the cut there. Get our newsletter from Harold. You can see the video of Harold on Bloomberg with Deirdre Bolton, and read the article about Sotheby's selling that blue diamond for $19 million. Worldwide Precious Metals, they are going to be in Toronto in October. If you'd like to meet with them, a private information session, connect with them, wwpmc.com. Call 1-866-623-2002. Harold, thank you very much for another outstanding show and your knowledge as usual.
Well, it's my pleasure, Randy. You did a phenomenal job. Again, thank you very much. I wish everybody a wonderful weekend and a very profitable day.
Really encourage everyone to get our free weekly newsletter. You can go through it in 5 minutes or spend hours if you want. You can get it from Harold, Rare Colored Diamonds, or Worldwide Precious Metals. And definitely educate yourself. Listen to our radio show every week and keep on top of your finances. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.